There is a subtle, powerful difference between a stock that is merely cheap and one that investors no longer fully trust. PHINMA Corporation, today, stands as a prime example of that distinction. When a share price slides swiftly, it is often fear or panic at work. But when it drifts downward, quiet and persistent, it is usually reasoned analysis guiding the hand. PHINMA's shares have not collapsed overnight. Instead, their steady decline from the high 20s to the 14 peso range tells a story of prolonged market skepticism, a verdict rendered after scrutiny, not haste. This skepticism is plain in the numbers. As of early March 2026, PHINMA's market capitalization hovers around 5.17 billion, with shares near the lower end of their 52-week range. The market now values the company at just over half its book value, a traditional signal that investors expect the business's assets will struggle to deliver worthwhile returns. Ironically, PHINMA itself is not in immediate crisis. Its revenues have climbed, and its business spans education, building materials, property, hospitality, and housing. Yet, for equity holders, earnings tell a less encouraging story. Over the past year, profit attributable to common shareholders plunged, dragging down per-share earnings. And so, revenue growth without genuine value for shareholders becomes hollow in the market's eyes. This pattern persisted. In 2025, PHINMA posted a net loss attributable to the parent, even as consolidated income stayed positive. The nuance matters because a strong segment, its education unit, has been forced to offset persistent weakness elsewhere. Construction materials and property have weighed heavily, eroding the benefits of diversification. Capital raising has brought in fresh funds, but using new money to nurse underperforming units raises uncomfortable questions. When will growth yield profits worthy of investors' patience? With significant liabilities, each peso must work harder now. The result is a harsh but not illogical market verdict. The stock is not being punished for collapse, but for ambiguity, uncertainty over when, or if, shareholder returns will materialize. Until PHINMA's expansion proves itself in clear, consistent earnings, market caution may continue. For investors, patience here is not just a virtue. It is a necessity grounded in clear-eyed scrutiny, rather than hope alone.